Nigeria has embarked on a pioneering financial initiative with the launch of its first ever dollar-denominated domestic bond, aiming to raise $500 million from local and international investors. The announcement was made by Nigeria's Minister of Finance and Coordinating Minister of the Economy, Wale Edun, during a statement underscoring the country's readiness to stimulate economic growth through strategic financial instruments. Now, this bond has unique features, including bullet repayment in US dollars and full principal repayment at the end of its 5-year term. Now, it is exempt from income tax on the interest payable to bondholders and will be listed on platforms such as the Nigerian Exchange and FMDQ. Now, let's have Victory George, who is an investment research analyst at Meristem Securities Limited, to talk to us and help us understand this better. Victory, thank you so much for joining us.
Good morning. Thanks for having me.
Now, this dollar bond is the first of its kind in the country. Investors in the series $500 million domestic bond will actually get about 9.7% dividends. Do you consider this attractive enough?
Yeah, thank you so much for that question. Well, this bond issuance, like you mentioned, is the first of its kind in Nigeria, in Africa per se, a domestic USD issuance. And looking at the dynamics of this transaction, the target market is specifically Nigerian residents and also Nigerians in the diaspora. So it's really quite attractive. The domestic investors are quite in an upbeat mood for this instrument. And another attractiveness to it is the appeal to retail investors, given that the minimum investment amount is $10,000 US and in subsequent $1,000 additions. So compared to a Eurobond instrument that requires a minimum subscription of $200,000. So this is quite appealing for the target market.
And also, given the unique structure of Nigeria's first dollar-denominated domestic bond offering bullet repayment at maturity, do you consider this a viable approach to the country managing its debt portfolio too?
Yeah. I think this is quite specifically targeted to manage the country's debt, as we've seen, different measures put in place, focusing on debt sustainability, like the sourcing of longer term foreign loans with moratorium periods of around 10 years. So the country is really much keen on spreading his interest payments and also principal payments on debt across the long term. So this gives the fiscal authority the breathing space in managing debt and making payments on its obligations. So it is a specific one.
Okay, so considering the facts around this particular bond, we understand that to participate in the offer, all payments will only be made into designated accounts through the banking system and electronic transfers. And from the offer documents obtained, as we saw yesterday, this allows cash deposits, while subscribers must provide all know your customer requirements. So what are your thoughts on the rationale behind this, and do you consider it too restrictive?
Well, yeah, I do not consider it too restrictive. In transactions like this, there is that need, to promote transparency and ensure that the funds that are being brought in for this issuance, is free from every form of illegalities. So it's just a measure to ensure that transparency and the free flow of the process towards this instrument generally.
Well, you actually gave this particular bond a thumbs up. You gave this instrument a thumbs up, but then there is still one issue around maybe unforeseen market events impacting the bond. That was one of the things that was raised by the Minister of Finance during the launch of this particular bond. So let's look at the domestic side first. Are there unprecedented risks that investors should be wary of?
Well, looking at the dynamics of this instrument generally, being a USD bond, well, there's an inherent risk, saying that the repayment of this bond will be made in US dollars. So investors will really, be wary in terms of anticipation of if, there would be, the efforts, to meet, obligations like repayments and also the principal repayments at the end of the tenure. So Yeah, so there's that base to it, but generally, I see the risk as minimal. Given that the country is well buffered, to meet repayments, and the country has that history, of meeting its debt obligations, particularly on foreign debt. So investors, are really much, confident. The fiscal authority has been able to build, that confidence in investors that the investments are quite safe, and the government would not be forced, in meeting the obligations on this bond.
So what about global economic factors like geopolitical events, prevailing interest rate environments, as we've seen, particularly in major economies like the US and Europe? Can these have some sort of adverse effect on this bond?
Yeah, well, looking at it, I do not see so much of a direct impact, particularly because of the target audience or the target market for this instrument. In-house investors, the DMO is actually quite confident that we have, domestic, Nigerian, resident investors with USD balances, particularly domiciliary, accounts that would, really make this bond, bring the healthy demand, to this bond. So I expect the bond to be oversubscribed. Yeah, particularly the DMO has also, gleaning from their posture, they're also quite confident. So this risk might not, really have a direct impact. I'm seeing the target market for this bond.
Well, I'm still a bit concerned about this, looking at it from this line. I'm wondering how Nigeria can navigate the challenges, maybe, issues posed by the current global economic, probably interest rate conditions for a bond price that will appeal to investors, because if it is priced too high, that is probably offering low yield, it might not attract enough investors. And conversely, if it is priced too low, offering a high yield, the government might end up paying more in interest than necessary. So how would you expect the government to address this?
Yeah, from the way I see it, the pricing is really not much of an issue. 9.75%, rate on this bond is really quite appealing. I'm saying that it is, the rate on the bond is pegged to a similar tenor, the 5-year tenor euro bond, which is currently doing around 10%. So the domestic investors, like I mentioned, which are the key target market for this bond, are really quite attracted to this, and seeing that it is a novel kind of issuance, investors are really much, keen on seeing how this will play out, and this would largely set the tone for subsequent, issuances.
Okay, let's just quickly talk about the economic impact and policy implications for Nigeria. What would you consider as potential economic outcomes for the country in anticipation of a successful raising of this $500 million bond?
Well, it's a positive one. Look, on the economic side, it's a positive one. On the FX side of it as well, is a positive one. This basically means more firepower for the CBN to intervene in the FX market. And this bond issue would really go a long way, for the government to meet its supplementary budget, funding the supplementary budget. And the way this will play out is that the funds from this issuance, the CBN would have to swap it to naira for the government to to push its various infrastructure developments across key sectors, and also funding the supplementary budget, like I mentioned. And on the other hand, this provides more firepower for the CBN to intervene in the FX market. And in the long term, bringing that liquidity, to the FX market, ensuring stability. So I see it as a positive one on the economic aspect of it, and also on the FX side of it.
Well, the Nigerian government has come out to say that it's hoping to improve the value of the naira, shore up the foreign reserves, improve and deepen the capital markets with liquidity. So let's see how investors will buy into this and how that can translate into something meaningful for Nigeria. Victory George, investment research analyst at Meristem Securities Limited. Thank you so much for your time.
Thanks for having me. It's my pleasure.